Ladies and gentlemen, good day and welcome to BSE Ltd FY2024 Investor Conference Call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anand Sethuraman, Head of Investor Relations. Thank you, and over to you, sir.
Thank you so much, Sagar. Good evening, everyone, and thank you for joining with us today. This is Anand from Investor Relations at BSE to discuss BSE's earnings call for FY2024. Joining us on this call is the BSE's leadership team, consisting of Mr. Sundararaman Ramamurthy, Managing Director and CEO, Mr. Deepak Goyal, Chief Financial Officer, Mr. Samir Patil, Chief Business Officer, Ms. Kamala K, Chief Regulatory Officer, Mr. Girish Joshi, Chief of Listing and Trading Development, and other members of our business, finance, and investor relations team. Do note that this conference is being recorded. The transcript of this call, along with the earnings release and presentation, can be found in the investor relations section of the BSE India website. Before we get started, I once again remind you that our remarks today may include forward-looking statements. Any actual results may differ materially from those contemplated by these forward-looking statements, and any forward-looking statements that we make today on this call are based on assumptions, and BSE assumes no obligation to update these statements as a result of new information or future events. With this, I will now request Mr. Sundararaman Ramamurthy, Managing Director and CEO, to give a brief overview of the company's financial and business performance for the year FY2024.
Thanks, Anand. Good evening, everybody, and a warm welcome to all our esteemed shareholders for joining the call today. It is with great pleasure that I stand before you today, having completed my first full financial year as the MD and CEO of BSE. This past year has been full of challenges, opportunities, and most importantly, a period of immense learning and growth for both me and the entire organization. But overall, I'm happy to say that the last year has been crucial in laying the foundations for the future growth of BSE. There were several new highs and announcements for the Indian capital markets as well. The combined market capitalization of all listed stocks on BSE hit the rupees 400 lakh crore milestone for the first time ever, owing to the buoyancy in the Indian economy and participation across the spectrum. When I joined BSE, registered investors based on unique client code stood at 12.1 crores, which has since increased to 17.1 crores as on date, a growth of 41%. This is a testament to the growing confidence and interest in the capital markets, and it is our responsibility to help them navigate the financial landscape. As we witness a surge in investor registration, I want to acknowledge a crucial aspect of our responsibility, which which is investor education and investor protection. We have taken concrete steps to enhance and safeguard the ecosystem of Indian capital markets. The company, through its Investor Protection Fund, was instrumental in conducting 13,780 investor awareness programs throughout the country the financial year 2023-24. We have also adopted to digital and social media as a means of spreading awareness, as it is the trend seen amongst investors. As a part of digital strategy, BSE successfully made 11 videos on various topics related to securities market in Hindi language, with the videos evolving around one common character called Mr. Mane. These Mr. Mane videos became very popular in short span of time, with total views across social media and YouTube exceeding 10.75 crore views. We have also sent investor awareness messages with an embedded video through WhatsApp to over 4.5 crore active investors registered with BSE on various topics related to securities market. Moving on to some notable regulatory initiatives in the area of investor protection. The Investor Risk Reduction Access IRRA platform is an initiative conceptualized and implemented by market infrastructure institutions under the guidance of SEBI to reduce risks faced by investors in the eventuality of technical glitch or trading member end at both primary side and disaster recovery side. On the listing side, we streamlined the IPO listing process with introduction of T+3 day listing for IPOs. The faster turnaround time benefits both companies seeking to raise capital and investors eager to participate in new offerings. Coming back to the updates pertaining to the exchange, I am happy to share that BSE recorded its strongest year in its history with a record revenue of rupees 1,618 crores on a consolidated basis. We have successfully relaunched our index options segment and continue to improve its performance while also delivering strong results in our equities, mutual funds, and clearing and settlement business. We have also announced plans to launch new products and services to further strengthen our offerings. The investments we are making in our infrastructure will create an even stronger platform for long-term sustainable growth. I will now share some of the key financial numbers on a consolidated basis for the year ended March 31st, 2024 as compared to the previous year. For the first time in history, BSE Group revenue crossed rupees 1,500 crores to reach a total revenue of rupees 1,618 crores 70% compared to the previous financial year. This growth is led by strong performance in transaction-related income, treasury income from clearing and settlement services, and investment-related income. Similarly, BSE's operational revenue have grown by 70% to rupees 1,390 crores from rupees 815 crores. The net profit attributable to shareholders of the company, excluding CDSL stake sale, stands at rupees 411 crores from rupees 221 crores in the previous year, a growth of 86%. The operating EBITDA for FY24 stands at rupees 399.9 crores from rupees 197.4 crores last year, with operating EBITDA margin expanding to 29% from 24% earlier. The net profit margin, excluding CDSL sale, stands at 25% as against 22% last year. The clearing and settlement operational revenues increased by 70% to rupees 126 crores from rupees 74 crores. Treasury income from clearing and settlement funds has increased by 121% to rupees 184 crores from rupees 83 crores. Other operating revenue, which includes data dissemination fee, training income, software income, has increased by 3% to rupees 91.7 crores from rupees 89.5 crores. Investment income increased by 85% to rupees 202.4 crores from rupees 109.3 crores. I also want to apprise you of two key factors that impacted our profitability. One is contribution to core SGF. BSE's clearing ICCL had to contribute an amount of rupees 91.7 crores for FY24 towards its equity and currency derivative segment, which is 67% higher compared to previous financial year. Second is clearing and settlement charges. As you know, these charges are a function of the fee levied on the clearing and settlement services provided by clearing corporations. BSE has incurred a cost of rupees 206.5 crores on a standalone basis compared to rupees 61.7 crores in the previous year. As many of you may be aware, BSE has received a letter from our market regulator, SEBI, dated 26 April 2024, with respect to differential regulatory fee for the past periods, along with applicable interest. We are currently looking into the matter and pending finalization of the outcome. Based on the prudence, the company has provided in the current period an amount of rupees 170 crores towards differential regulatory fees. On back of these financial results, it is my pleasure to inform you that the Board of Directors of BSE Ltd has recommended a final dividend of rupees 15 per equity share, having a face value of rupees 2 for the financial year 2023-24, subject to the approval of shareholders in the ensuing annual general meeting. The total payout with a dividend payout ratio of 71.3% of the current year profits would be rupees 206 crores on a standalone basis. I would now like to share updates pertaining to business. For specific numbers pertaining to turnover, kindly refer to the BSE website and the investor presentation. Let me start by covering our primary market segment. BSE platforms continue to remain the preferred choice by Indian companies to raise capital by enabling issuers to raise rupees 21.3 lakh crores by means of equity, debt, bonds, commercial papers, etc. Moving on to our trading segment. On the 15th of May, next week, we will mark 1 year since the relaunch of index derivative segment. This relaunch was a watershed moment for BSE, and I am incredibly pleased of what we have achieved collectively in the past year. In less than 1 year, BSE ranks second amongst exchanges globally, and our flagship index, Sensex, now ranks fourth in terms of derivatives contracts traded according to the data published by the Futures Industry Association, FIA. More importantly, BSE earned rupees 176 crores from this segment despite having promotional offerings of lower transaction charges of rupees 500 per crore of premium for BankEx and Farweek contracts. Further, BSE has implemented a new fee structure for Sensex and BankEx options contract, which will be effective from 13th May 2024. It also gives me pleasure to inform you that Sensex derivatives is continuing to grow, and it broke its own record on 3rd May 2024 when more than 52 crores contracts traded, representing a notional turnover of over rupees 388 lakh crores and a premium turnover of rupees 30,750 crores. The BankEx contracts has also generated significant interest since its expiry date changed to Monday from October 16, 2023 by creating a new record with 19 core contracts traded, representing a notional turnover of rupees 160 lakh crores. Since relaunch, more than 400 members have traded BSE derivatives, representing around 36 lakh active clients. In my last earnings call speech, I had announced regarding our strategic plan with respect to the expansion of core data centers, and I am happy to update that we have completed phase 1 of our expansion, allowing us to accommodate more clients and ensure unmatched service continuity. With this price revision as mentioned earlier, we will be able to ensure continued investments in product innovation and necessary technology upgrades for the trading systems and the data center capacity. BSE has recently announced its foray into single stock derivative space. Effective 1st July 2024, all stock derivatives contracts at BSE will expire on the second Thursday of the month. This is in line with our strategy to improve our product suite to complement the existing product offerings available in the market. Moving on to our mutual fund distribution segment, BSE Star MF delivered yet another year of record revenues and performance, up 63% year-on-year to reach rupees 128 crores. The total number of transactions processed by BSE Star MF grew by 55% to reach 41.1 crore transactions in FY24 and 26.5 crores in the previous year. On an average, the platform processed 3.4 crore transactions per month in FY 2024 as compared to 2.2 crores in FY 2023. The platform also processed a new high of 4.73 crore transactions in April 2024. Given the growth, we are going to continue investing in Star MF and improve it in terms of scalability, functionality, and order processing, and introduce a new platform called Star MF 2.0 next quarter, that is quarter 2 FY 2025. Moving on to our subsidiary businesses now. I also would like to update that S&P Dow Jones Indices LLC is in discussion with BSE for divestment of its equity stake in Asia Index Private Limited, a 50-50 joint venture with BSE. This will be an important area of focus in the coming year, given the growth of passive investments in India. The BSE Group, directly or via subsidiaries, also has its presence in other related business, including India International Exchange, India INX, BSE's exchange at GIFT City, BSE EBIX, the Hindustan Power Exchange, BSE's e-agricultural markets, BEAM, spot platform for trading commodities, and BSE Administration in Services Limited, Basel. BSE is committed to these new areas and is constantly working with partners for the growth of these businesses. As we move forward, we see that there is a significant opportunity to continue to expand and evolve these businesses. Looking back at the last 1 year, I'm happy to say that we have done well in our objective of a vibrant trading platform. We have created a strong portfolio of businesses, a rapid pace of innovation, and a strategy that is well understood. Now, it's time to widen and deepen our existing product offerings, and we feel that we are on the right track. With these updates, I now hand over the call back to Anand.
Thank you so much, sir, for the brief update. I would now like to throw the floor open for question and answers. Thank you so much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pranav Thakkar who's an individual investor. Please go ahead. Mr. Pranav, your line is unmuted. You can please proceed with your question. As there is no response from the line of the current participant, we'll move on to our next question. Our next question is from the line of Narayanan R. from FinTech Research. Please go ahead.
Hi, can you hear me? Thanks for taking the question. So there used to be a slide which was there in your previous investor decks where you had given market share across your segments. That doesn't seem to be there in the current release. So I just wanted to get a sense of why it has stopped and what is the market share in futures and options for this quarter, and how do you measure it? Similarly, what's your market share for the Star MF in Q4?
Okay. First of all, thanks very much for the question, Narayananji. As I always say, in respect of derivatives, we do not measure the market share at BSE in the normal way in which the market measures it. The reason is the products are different. In the case of cash equities, we can talk about market share. In the case of the derivatives, it's very difficult to talk about market share. Our goal has always been that what we do in terms of number of members, number of investors, and the number of foreign participants who trade. There, you know, the numbers are available in our presentation. And also, Our volumes are available regularly in our website. In case you would like to compare it as a market share, it will be easier for you to do. But we are measuring our vibrance in terms of how much we are exchanging. Today, we have around 400 members. We always like to grow to 500, 600 members. Today, we have around 3 million UCCs are trading with us. We always aspire for a bigger number there. Today, we have around 100 SPIs. We want to scale it up to at least 200 to 250 SPIs. Today, we had only 2 index products. Now, we are slowly making our entrance to stock derivatives. We want to get into more products. Today, a few weeks before or a few months before, only our near month expiry was liquid. Now that is slowly getting into the next week and next month as well. This is the way we are measuring our progress.
Got it. So the market share that you used to disclose, that was based on what in the past?
Sir, it was based on notional turnover for the derivatives market. Yeah.
Okay, got it. And in BSE Star, what was the market share in Q4?
We continue to have the same type of a market share of around 85-90%.
Okay, got it. And just one follow-up on this BSE Star MF 2.0 that you spoke about. What are the key differences between the current platform and the one that we are planning to launch? And how is it proposing to help us?
Yeah. So if you will recall, the mutual fund industry underwent a lot of regulatory changes and has been evolving over a period of time. So when you start with the code and we start upgrading it with new changes happening, it's always important in order to ensure the following things, namely functionality, features, resilience, governance, sustainability, and growth. We need to always have a relook into whatever codes we have written and rewrite the platform so that we can reinvent and start from the beginning. So this is a modular platform which helps in scaling up different parts differently and addresses all the areas that you just mentioned in terms of functionality and other things in this platform. That is what is the major change. So it will be very helpful for the market in providing stability and functionality for growth.
Got it. Thanks. That's it from my side. All the best.
Thank you. The next question is from the line of Prayesh Jain from Motilal Oswal. Please go ahead.
Yeah, hi. Am I audible?
Yeah, you are.
Yeah. Hi, sir. So firstly, on if I look at your active customer base, you mentioned it's about 3 million, and for the other player also it's about 4 million. So I think a large portion of that has been kind of penetration has been reached. Do you think that the ticket size is different and we can still have higher growth there? So possibly, that's the first question. I'll ask the second one after that.
So yes, we feel that there could be further growth because of multiple reasons. Because what we find is there is a good amount of significant interest from the institutional players in equities derivatives who are coming in. That is one part. And even with these 3 million players, what we are talking about, while the number may be looking good, the way in which we are talking about deepening and widening and broadening, what we are talking about in terms of futures volume, next month, all that, there is a long way to go. That is why we feel that we should extend the customer base to such of those people who have a longer time horizon, and therefore the product will be deepened and broadened.
Got it. So secondly, on the SEBI letter and the follow-up price hike, is that completely compensating for the incremental charges? Firstly, that, and secondly, you mentioned that you will be kind of representing to the regulator, or you can be considering your options on that. Is there any possibility of a reversal there? And if there is, then would you cut back the prices?
See, we have brought the prices of the transaction charges of BSE on par with what is the market's existing charges now. In a way, if you look at the SEBI letter, yes, we have received a letter on April 26, 2024, wherein we are informed that the SEBI turnover fee should be computed based on the notional value and not on premium, and it has to be done for the last 18 years. It clearly predates my coming into BSE. I'm just 16 months old here, and this topic is about 18 years. When I look back at the records that are available with BSE, based on expert opinion taken from time to time, BSE has been paying it based on premium and not on notional turnover. Now that the letter has come, we will be requesting and representing and submitting and appealing to the regulators to reconsider this decision, and we are very hopeful that we will be heard by the regulator. So that is our request to the regulator. And if it happens, it will be really good. And you also will know that one another major area which is eating away all the gains that we are making is the charges made by the other clearing corporation, which is very huge, because of which a significant part of our earnings are going towards the clearing and settlement charges. We are also appealing that should be reviewed and it should be reduced. So we hope that this happens, which will help us to get some profit so that we can improve more and more in creation of infrastructure and facilities for the market participants.
Okay. And so lastly, what new index products you think you can bring on, and your competitor has also launched a new contract now. So whether any such index contract is something that you are looking forward to launch, that would be helpful. Thank you.
No, it's a very, very interesting and important question that you are asking us. Yes, our products are just, if you look at it, Sagar, Sensex derivative is just 1 year old, going to become 1 year old, and Bankex derivative is yet to become even 6 months old. So it is too early to be just going on introducing products. Nevertheless, based on market demand, we have introduced stock derivatives, as you know. This will be a monthly product, but expiring in the mid-month. So similarly, we have quite a few product ideas. We are developing on every one of those ideas, and sure we will be coming with one behind the other, as and when we feel the products that we are introduced are going on stabilizing. If you recall, I have always been telling that once our products stabilize, we will always come out with a new product. We feel that by and large, Sensex and Bankex are stabilizing now. Therefore, we have come with the stock product. Once we feel that the stock products are going to stabilize, we'll come out with more products, as we have a lot of ideas there.
So that's helpful. Ketan, one more, what is your view on the co-location revenues, and how should we think about this from FY25 and 26 perspective, and whether these would be profit contributors in these years? That's it from my side. Thanks.
So one request from my side, there is a big queue. If every person could restrict just to 2 questions, it will be helpful. I understand the enthusiasm. I really appreciate it. So let this be the last caller who is asking 4 questions. Otherwise, everybody, if they could restrict it to 2 questions, we will be highly obliged. As far as co-location is concerned, we feel that it is an important part and parcel of developing, deepening and widening the market base. As you may know that we started with around 100 racks when we just started the derivative segment. All those 100 racks have consumed. The phase 1 of our expansion we had undertaken, and I am happy to say that it is complete, and we are in the process of allocating those racks. And as and when demand comes, we will be building more and more co-location to cater to the market needs. We are here to serve the market as market infrastructure intermediaries. We will be very conscious of it, and we will fulfill our duties.
Thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have a follow-up question, you can rejoin the queue. The next question is from the line of Devesh Agrawal from IIFL Securities. Please go ahead.
Good evening, sir, and thank you for the opportunity. My first question is, sir, the tariff increase that you're talking about will be effective from May 13th. Now, this is basically for the increase in the regulatory cost that we have seen, we had to take this. Otherwise, earlier we wanted to be a more gradual in terms of tariff increase. So my question here is, do you expect any impact on the volumes because of this tariff increase, given that this is the exchange fee is a significant part of the option trading cost?
I'm not, you are right in telling that we have increased the tariff from May 13. See, this is very essential for us to increase the cost at this point of time, because the clearing and settlement costs are already very high, and there is an increase in the SEBI turnover fee as well. So we've gone ahead and do that so that we are able to break even and able to cater to the increasing needs of provision of infrastructure. So we have done that, and therefore we feel that it was an essential element in the part of growing the market.
But no sense in terms of likely impact on the volumes, or too early to talk about it?
It will be the market forces which will decide. I'm sure. I will not be able to say how the market will decide.
Sure, sir. And so my second question is,
our feeling is the charges are in line with what the market is already paying. So we have not changed it in any fashion whatsoever. It was at a discount earlier, a significant discount. We have now brought it on par.
Right, sir. And so my second question would be, in terms of this 85 crore of clearing and settlement cost that you have paid, how much of that would be for equity options, and of that, how much is paid to NSE?
I do not know where you are getting the number 85 crores.
It's part of the standalone numbers for Q4.
Only for the one quarter you are talking about?
Fourth quarter, sir. Fourth quarter.
Yeah, got it. A significant portion of it is coming from the options side.
And how much would be paid to NSE, sir, of this 85 crore?
Significant portion again goes to NSE. Around the 63 crores or 64 crores has gone to NSE from this.
Okay, sir. Okay. I have some more question, but
clearing out. What I meant was NSE is clearing out, not NSE, NCL.
Yeah. I have some more question, but I will fall back in the queue. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Amit Chandra from HDFC Securities. Please go ahead.
Yes, sir. Thanks for the opportunity. So my question is on the options profitability. So obviously after the SEBI fees and the price hike, the options profitability has been impacted. And one of the prime reasons for that is the lower options realizations that we have versus NSE. So we earlier talked about the increase in the options realization maybe on the non-expiry days. So what steps are we taking in terms of increasing the premium to notional ratio? And also, is it fair to assume that with co-location coming in, the overall the depth will increase and we'll see an increase in the premium to notional ratio?
That's a very good question. Thanks for asking this. See, the participants decide which expiry is suitable for them to trade. Typically, institutional participants tend to have a longer term view of the market. So they like to talk about next week, next to next week, next month, etc. That's why our strategy has been to deepen and broaden the market using the institutional players, and also some of the high frequency traders also have long-term views where they tend to participate in the longer-term products. So we are encouraging such of those people who have a longer-term view in the market, and we are requesting them to deepen and broaden the market so that, one, the market itself becomes very stable. Two, it really and clearly performs an economic purpose in the market. Three, it improves the premium quality, as one would call, of the notional to premium ratio. These are the steps we are taking. And we also feel that providing colo will be very helpful in this direction, because many of the institutional players who like to come in and who have the objective of trading longer term products like to have a presence in colo to execute their strategies. So these are conjoined together in that sense.
Okay. And sir, my second question is on the core SGF part. So obviously we have seen a very sharp fall in the currency, like currency derivatives volumes. And if I'm not wrong, 50% of our SGF is parked into the currency, and we in the last quarter also we contributed towards that. So is it fair to assume that the future contribution to SGF can be taken care of by shifting some of that from currency from one segment to another, or is it because it's a very high amount, and correspondingly in the F&O side we have very low amount. So is it fair to assume that there can be a shift there?
See, my understanding of I'm not an expert in core SGF because it comes from the clearing corporation side. But my understanding of it is while if there is an increase, it immediately kicks in. When it has to taper down, it takes time because the increase gets sustained in the system for quite some number of months before it even could be reworked to brought it down. So while technically over a period of time this will be not required in currency because the volumes are coming down, with the suitable and necessary regulatory approvals, it can be reused towards other things, other segments. I will not presume that because the volumes have fallen down in the last few weeks or few months, immediately the core SGF requirement will come down because it is based on peak over a period of time, as you will understand. So that is the way I look at it actually.
Okay, sir. Okay, sir. Thank you. I will be back in the queue. Thank you.
Thank you. The next question is from the line of Navdeep Singh Pundir, who's an individual investor. Please go ahead.
Good evening. Am I audible?
Yes, sir.
Mr. Ramamurthy, first of all, please accept my heartfelt gratitude for the kind of performance the company has delivered over the past 1 year. I've been a shareholder for 6 years almost, and I'm sure the business will only grow under your leadership. I have 2 small shareholder-related questions. Our dividend payout ratio this year is close to 71%. Is there a change in the dividend policy? Because generally we get close to 100% of the standalone profits.
There was no specified policy, Navdeep, that we have to have a 100% dividend payout. Therefore, it is not a digression from the policy per se. But you are right. In the previous years, almost 100% was the dividend payout ratio. You are absolutely right there. This year, as you know, in the last few weeks, we were to take the stand of providing for a significant amount of our profits towards the differential SEBI regulatory fee. And we will be, of course, representing and requesting and appealing to the regulators. Notwithstanding that, as a matter of prudence, we have provided for that has significantly diverted the profits from what could be available for distribution to be provisioned. And from an absolute number perspective, from 165 crores last year, we have paid this year 206 crores actually, which is around the 41 crores increase, which in itself from a dividend amount perspective around 25% increase in that sense, which we are able to do. The balance 80 crores we have retained and taken to the reserves. As you know, we are also embarking on improving the market infrastructure for the ease of trading of people and also for providing more and more products. In order to build the infrastructure, we felt as a matter of prudence, some amount should be taken to reserves and well utilized towards infrastructure building. That was the reason why these numbers have been arrived at.
Thank you, sir. Sir, one more question on one of our subsidiaries. The exchange we have at the GIFT City, the volumes have kind of dwindled over the past 1 year since NSE has launched its GIFT Nifty from there. So, is there any update on the merger which we are hearing? I mean, can you just provide us any information on that, sir?
It's again a good question that you are asking. As you know, GIFT City is very, very close to our heart. The India INX was the first exchange that has been established with under the guidance and under the guidance of Narendra Modi ji, our Prime Minister. We want this exchange to flourish and do very well. Yes, we are also taking note of the fact that the volumes are dwindling. We are going to develop our efforts to do whatever best we can in the interest of the nation, whereby GIFT City continues to flourish and grow, and more volumes come into the exchanges and gives a breather for life. We are at it and we will be working on it.
Thank you. Thank you so much, sir. Thank you.
Thank you. Our next question is from the line of Aditya Jain from BNNS. Please go ahead.
Hi. Am I audible?
Yes, Aditya ji.
Yeah. First of all, congratulations for the amazing performance. So I have one question. So BSE's major revenue increase has been because of derivatives volume in last 1 year. You have spoken in one of the questions that product stability is one of the key focus, and then we are increasing the products. So in derivative trading, especially in Sensex, BankX, so there were 2 dates when there were big slippages on the system. 2nd February 2024 and 12th April 2024. So a lot of traders after these dates were saying that we don't want to trade in these particular products. So my question is, what was the issue on these 2 dates because of which stop loss which were there in the system did not get triggered? And second, is BSE doing anything to fix it, and will it happen in future or not? NSE is relatively more stable in case of such events. So what is BSE's stance and what are we doing to fix it?
It's a very good question that you're asking. On the 2 days that you mentioned, It is not the system stability because of which any of those things happened. When the market movement suddenly happens, in respect of an exchange where the order book is not very deep, when the stop loss orders get triggered because of the change in volatility profile, trades happen at whatever prices that are available in the order book, and therefore you find the graph going slightly in a peak and then coming back to normalcy. It is not unique only for this product. In the last 6-7 months, if you take, every product available in every exchange has seen such behavior during the intraday volatility spurs. Having said that, in the interest of product stability, whether anything could be done to ensure that such peaks as it happens because of the volatility changes or market information coming in, how it could be sort of smoothened. The curve, how it can be smoothened when we look at it, we have introduced multiple actions in the area of surveillance. The latest one is called as limit price protection. This was 2-3 weeks before, I guess, we introduced it. We feel such type of measures are continuous and evolving, and we will continue to put our efforts to ensure that whatever best we can do to smoothen such movements. Market movement, sudden ups and sudden downs are not in our hands because they are market movements. But when they happen, the impact on the order book automatically becomes less if we deepen and broaden the market. It comes back to our theme. That is why more and more effort should be made to deepen and broaden the market, which we are doing. And second is, whatever additional thing that we can do, like a LPP, limit price protection, which we talked, that's the latest one. Earlier, again, we have done quite a few things, and it is evolving, as I said. We will be working on even providing more and more things wherever we come across some such possibility to prevent it from happening again, to whatever extent we can.
Okay. So what I understand is it was a liquidity issue at depth, at order book at depth level.
No, Aditya. It was a sudden volatility issue because of which when the market moves sharp, option prices move sharp. When it moves sharp, stop loss orders get triggered and eats away whatever liquidity is available in the market. So it is a volatility which makes it. If you could smoothen the curve by external protection measures like LPP, it helps. It is why we have put it.
Okay.
Thank you. The next question is from the line of Jayant Kharote from Jefferies. Please go ahead.
Thank you for the opportunity and congratulations on a great set of results. Just building on to the earlier discussion about the data center and co-location piece. Sir, if you could outline how is the utilization tracking and at what level do you feel you'll be comfortable to start monetizing this business? A, that, and B, in terms of growth, let's say if we were to approach this monetization slightly slowly, and you've added another 100 racks as we understand in that 15 kVA product. So what are the plans for the next 1 or 2 years? Where do you see this 200 number going over the next 1 year?
Thank you, Jayanji, for this question. If you may recall, when we started our journey 15 months before, we had around 100 racks. And BSE was not collecting any money from the members, and it was actually subsidizing the cost of the capital cost and the maintenance cost. When we started this derivatives, we said that we will recover the cost associated with the co-location from the members, and so that we will not be out of pocket in respect of the existing racks. So we started charging. Those charges were at a discount to the market charges at that point of time. Now, as the phase 1, we have introduced new racks, brand new racks, by incurring capital costs. 100 racks have come into existence. Some of them are 15 kVA racks for the first time in India, and others are 6 kVA racks like everybody else provides. So in order to ensure that we are not out of pocket in respect of both the capex and opex, what now we have done is we have brought the colo rack rent on par with what is there in the market. Already the charges have started happening in respect of colo. What is not yet happening is the charges per message that comes into the colo system, which are applicable in other places, we have not levied. Probably we will not levy it immediately. We will again allow things to stabilize for some more time, and after some time we will think of levying probably at first stage at a discount and then going full-fledged like what we have been doing all along. So if you ask with regard to just the colo racks, yes, we have already, we will not say monetizing, we have already started collecting rent, which will ensure that we are breaking even and we are not out of pocket in respect of all the racks, including the new racks.
Yes, sir. And just to build on this question, do you expect once you start levying on the messaging piece, your yield per rack should match some of the other peers in this business?
Will not, because others are charging order messages for the messages as well, which I am not charging at this stage. So it will not match. It will be still at a discount. It will be still at a discount. I look at it this way, JMG. If there is a discount today, that means there is a scope for me to increase it further tomorrow. So that is the way I am looking at it. I'm sorry, you asked one question which I had not replied. That was, where do we see if the numbers going in a year or two? We already have plans of bringing in 150 more racks if there is a market demand for which we have identified place. If that also gets consumed, then we will further increase it dependent on the demand, and at that time we will find the place and do it. So clearly we are looking at the market for the demand so that timely we will provide a supply. Well, there will be some gap between demand and supply naturally because it's an evolving area. But as we promised earlier that we are building the new rack and we will give it to you, and today hopefully we are allotting it, we will do the same thing. Once there is a demand building up, we will meet it with the supply.
Great. Thanks and congratulations once again, sir.
Thank you, Ji.
Thank you. The next question is from the line of Deepak Kumar Achwera from IGE India Family Office. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good evening. Till now, BSE and NSE, what we think was working in collaboration.
I think we have lost the
close the connection.
Sorry for that. Just give me a moment. Let me just try and reconnect that. Yes, Deepak Kumar, please go ahead.
Can you hear me?
Yes, sir.
Now we can.
Yeah. So I was saying that till now, NSE and BSE, we thought working in collaboration. Friday and Monday was exclusive to BSE. Now NSE has launched Nifty Next 50 on Friday, and that too without any charge. So isn't it that will eat lots of volume which is there on BSE? Would like to have your view.
The number of products cannot remain just at 5 in a week because there are only 5 days in a week. At some point of time, there have to be more number of products. I always look at it this way. I look at it as going to a restaurant and ordering only one dish. And second is going into a restaurant where a buffet spread is there and choosing whatever we want to eat and eat. When it is a restaurant which is supplying only one dish, initially there will be a lot of demand because there will be no other restaurant. But over a period of time, people will start preferring a buffet so that they can eat whatever they want. This analogy is what comes to my mind, though it is a very crude analogy, I accept. So over a period of time, I think more and more products will come in. So more and more products on a single day will continue to be there. And people will be choosing whatever for that day they need to hedge whatever positions they have. so that every product will start functioning effectively and doing a very good economic role for the market. That's the way I think the market will evolve.
So this time the success on F&O product is because of different day only, and if the different day itself is not there, means the market share which we are gaining is largely due to different day. This is the difference in the strategy earlier compared to earlier where BSE has tried and couldn't succeed. So the success is there because of different day, and now the different day is not there exclusively. So that's the concern.
No, you are perfectly right. Initially, the product differentiation in respect of Sensex, which made market participants to look at it, absolutely came because it had an expiry, which did not clash with any expiry, and therefore helped in optimal use of the capital. You are absolutely right there. But since the product has gained momentum now there will be room for people to, in any case, concentrate on Sensex and also look at other products that are coming in and use it effectively. The one great advantage of the indices that we have launched till now, they have great correlation with the other indices that are in the market. For example, if you take BankX, of course it has 100% correlation with itself. And BankX correlation with FinNifty is around 97%. BankX correlation with Sensex and Nifty is around 94%. BankX correlation with Bank Nifty is around 99.98%. So clearly, therefore, such a great amount of correlation in itself lends room for a lot of strategies to evolve. That's what I meant when I said the buffet example. There will be quite a few strategies evolving where when a new product gets introduced, if they are having significant levels of correlation like this, actually the existing product will grow along with the new product, helping the new product also to grow. That's the way I am looking at it.
Noted, sir. Thank you. Thanks. Best wishes.
Thank you very much.
Thank you. Ladies and gentlemen, we would take that as our last question for today. I would now like to hand the conference over to Mr. Anand Sethuraman for closing comments.
Thank you so much, everyone, for joining us on this call. If you have any further questions, please feel free to write to us at bse.ir@bsenia.com. We'll be happy to take your questions. Thank you so much.
Thank you, everybody.
Thank you. On behalf of BSE Ltd, that concludes this conference. Thank you for joining us. You may now disconnect your lines.